Hi, this is Vijay Bambani, and I'm with you today to discuss about a very funny aspect of life. Why, without knowing it, we are actually all options traders. Yes, you may not really realize it, but you're actually trading options even if you have nothing to do with the financial markets. Let me explain to you how. Once you're a commercially viable entity, somebody who's earning a little bit of money, you've settled down in a job or a business or any profession, you start to treat yourself as a commercially viable or a commercially valuable entity. And therefore, you want some safeguards and peace of mind. So you go out there and buy a life insurance policy. The concept of life insurance policy is, for example, if you are taking a 25-year-old policy where maturity will be after 25 years, and hypothetically for every 1 lakh rupee of insurance amount that you take, you will be paying 6,000 rupees as annual premium. Now, what you're actually doing is passing on the risk of an untimely death onto the insurance company. So even though you've not paid your 25 years of annual premium, if, God forbid, you were to have an untimely death, your family would get the entire sum assured from the insurance company. Without actually knowing it, you have bought a put option on your life and death. And the insurance company is now your counterparty, and they have sold you the put option, which means they are the seller of the option and you are the buyer of that put option. Believe it or not, the insurance guys are the only people, along with the income tax guys, who want you to live long and, in the case of the insurance company, continue to pay the premium so that they do not suffer a loss. The IT guys, on the other hand, want you to keep earning money so they can get their fair share of your profits or your salary. So, as long as you're alive, which we all want to be, you will continue to pay premium on the insurance policy, even though you're safeguarding yourself and your family from an untimely death. You will want to remain alive and continue to pay the premium. In the bargain, you're actually making profits for the insurance company. So this is one example of an options trade. The other example is a real estate deal. What if you're looking for an apartment and you happen to like one particular apartment? Let's say the hypothetical value of that apartment is rupees 1 crore. You don't have the entire money upfront. Therefore, you sign up a pre-purchase agreement with the seller that you will give the seller a token amount of 1 lakh rupees as earnest money deposit or token or deposit, whatever you want to call it. He holds that apartment for you for 90 days. He's bound to give you that apartment at the rate of 1 crore for that apartment and not sell it to anyone else. You will forfeit your deposit of 1 lakh rupees if you do not put up the remaining 99 lakhs. So what you have done is buy a call option on that apartment, which is worth 1 crore rupees, by paying a fraction of that amount as token money of 1 lakh rupees. Now this token amount is actually the option premium. By paying 1 lakh rupees, you've blocked an apartment for 90 days worth 1 crore. Here again, without knowing it, you've entered into an option agreement. Now here, if you actually sit down and think about it, what is actually happening from the point of view of the seller of that apartment is, if you manage to put up the remaining 99 lakh rupees, he is happy that he got 1 crore rupees, which was his asking price for the apartment, and all is well. If in the other case, you do not manage to rustle up the remaining money, in that case, he keeps the apartment as well as the 1 lakh rupee token amount, which you forfeit. So not only has he got to keep his apartment, but he's also got 1 lakh rupees for nothing. Now this is money for jam, which should actually get you thinking that option writing is actually more lucrative and a win-win situation provided you do it right as compared to option buying. Now let me go a little bit further, and if you get this, you're an expert at option trading before you even started. What if you were to collect 1 lakh rupees as token money for an apartment which you want to sell for 1 crore? The buyer is naive enough or simple-minded enough to agree to a 1 crore price and therefore pay a token of 1 lakh rupees, but at a later date realizes that the apartment is actually having a fair market value of 75 lakhs. In that case, what does the buyer do? Does it make sense to forfeit that 1 lakh rupee, or does it make sense to arrange the remaining 99 lakh rupees and buy a 75 lakh apartment for 1 crore? Obviously, it makes more commercial sense to write off that 1 lakh rupees. So to that extent, he has bought a mispriced asset, which is an apartment, at 1 crore rupees, whereas the fair market value was 75, realized his mistake and therefore forfeited that 1 lakh rupees. Which brings me to the second aspect of option writing. What if you could possibly sell a mispriced option strike price, which you know will not trigger in the coming derivative cycle? You collect a premium which the option buyer is paying you and sit quiet till expiry. This is money for jam. And if at all, these mispriced options, obviously from your point of view as an option writer, overpriced options, which is a scientific method of ascertaining, which we at Equity Master will do for you in the instant income product. We will identify mispriced options or overpriced options, give you a suggestion to write them so that you can ride the option premium till expiry and collect this payout. So doing this, you actually can monetize the market's imbalance or disequilibrium or the mistakes made by others to turn it into a profit for yourself. As we all know, the markets are a zero-sum game. So somebody's gain is equal to somebody's loss. You basically are trying to exploit the mistakes made by other traders, which would then result in a loss for them, so that it becomes a profit for you. The idea is to take money out of their pocket through the trading terminal in an exchange recognized product and put it in your pocket and turn it into good profits for yourself. Now this is the best example that I can think of in option writing. Although the product is mathematically intricate, but a good advisor like equitymaster.com can do all the legwork for you, and this is what in essence is the instant income product. Before I sign off, let me remind you to like this video. In the comment section, tell me what you think about this video and what else you would want me to cover in my next videos for you. Also, do not forget to share this video with your friends and family. Till then, take very good care of your investments and trades. This is Vijay Bambani signing off for now. Thank you. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.